Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Parkamanek. How you doing, D?
Good morning, Will. How are you?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Excellent.
And with that, let me share my screen here. While I'm doing that, as a quick note, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, data, analytics. If you have a question, type it into that live chat on YouTube. Will's watching it. He'll read it back to me. And while to give you guys a chance to put your questions in, we'll start out taking a look at the pre-market report to see if we could get insights, what's trading in the pre-market hours or what's going on in the pre-market hours, and then we'll move on to the questions. Okay, so right now I'm on the pre-market report, and these are stocks trading in pre-market hours. We have this calendar view up top. This allows you to go back into history, click on a date. You can see what happened in the pre-market hours on that date. Today we're on November 10th, and this is what's going on from a high level. We got 393 stocks trading higher, 269 stocks trading lower. As far as volume goes, we got 92 million shares trading on up volume versus 58.6 million shares trading on down volume. And if we convert that volume to dollar value, we have $1.9 billion worth of stock trading higher versus $1.1 billion worth of stock trading lower. So that from this perspective looks like so far trading in the pre-market hours is trading with some bullish sentiment and a bullish bias. Let's look at it from a couple more perspectives, then we'll move on to the questions. Coming down here, and down here we have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. We have 49 stocks that made our percentage gainers list. We have 46 stocks that made our percentage decliners list. So from that perspective, it seems more balanced. So, I would say neither bullish or bearish, really. It's a mixed bag. However, if you look at the list, it has stocks in there that are low cap stocks. There are ETFs in there. You have leverage products. Pretty much any security that's listed on a major U.S. exchange, if it's trading in the pre-market hours and meets our thresholds to make this list, make the list. And to narrow down to a small group of stocks, we could use the filters here above. If you have a watch list, you can filter by your watch list. We're going to do this filter in ETF. And when I click on it, it gets a drop-down menu. There are different ETFs to choose from. I'm going to select this one, SPY. That's the S&P 500 ETF. And when we do that, the list below gets filtered by stocks that are holdings in SPY ETF, which are the S&P 500 constituents. And here we see 3 stocks made our percentage gainers list, 5 on the decliners. So again, here, from that perspective, looks like, more even or mixed bag, even a little bit towards the bearish side. So you could see your, mixed signals so far in the pre-market. I wouldn't say it's overwhelmingly bullish or bearish, depending on how you're looking at it. We've got some bullish signals up here, some not so bullish down here. So I would say so far mixed bag. I guess we gave it a couple minutes, Will. If you have questions, I'll take them now.
Yeah, we had a question from a newer chameleon. He's asking, is there any way to scan for industry relative strength versus the SPY? I guess maybe breakdown. Can you scan the SPY versus its holdings, maybe?
Yeah, or you mean just the industry, like the sector versus SPY? Um,
Uh, it could be either or. Wes, maybe do you want to just see how the individual stocks are doing against the SPY or different sectors versus the SPY?
while we're waiting, a quick way here, I believe under options we have the snapshot view, and over here, what this is shown is the up top the options and implied volatility for each sector that makes up the SPY. So this is the SPY S&P 500. Then we have these sector ETFs. Okay, and down below, this is the performance. So here we have the options data. Here we have the stock performance data. So here's how SPY performed on a 2-week, 3 months, 6 months, 1 year, year to date. And you could just kind of scan with your eyes to see which sectors, right? Like over here, communications sector, technology sector, outperformed SPY. The ones that underperformed, the highest ones here, utilities, energy, REITs in a 1-year basis. So here you kind of get a view based on time, time period. So
Yeah, that's
that's
what Wes was at. Wes was asking for the sectors actually.
the sector. Okay, yeah. So
Yeah.
this is the, this is one place to go and take a look at it. Now, let's say you just wanted to see within SPY individual stocks or any of these. I'll use SPY as an example, but let's go to SPY and click on it. And if we look at SPY holdings, so in ETF, we could come down here to the holdings. And this gives us a list of SPY, all the holdings on Microsoft, Apple, Amazon. So you could see here, I'm going to close this for a second. So you could see here, these are right now listed by market cap. Okay, so these are the weightings in SPY for each one, but I think right now it's all sorted by market cap. And if we wanted just to look at how, these different individual stocks performed within SPY, all right, now keep in mind that some stocks have a higher weighting in SPY, so they're not all equally weighted. So the contribution of each stock to the percentage move is different, right? You could see here, Microsoft is the heaviest weighted stock in that index. It accounts for 7.33% of the weighting in that index. So the movement in Microsoft will, carry a bigger weight than something that's below it. But if we wanted just to see how the stocks within the SPY performed, then again, we could just take a look here. And let's say we wanted to look at a 1-year basis. We could just sort this highest to lowest. So here looks to me the worst performers over here, ENPH, SEDG, ALB. So you could see here, these are the worst performers in the S&P 500. Some of them down 50% or more. And if we wanted to go the other way and on a 1-year basis, look at the best performers, no matter what the weighting is, right? We're just looking at the individual stocks. You could see here, NVIDIA, Copart, Meta, number 3, up 215%. FICO. So some of these, are going to be low, even lower cap. Even Royal Caribbean made it up 76%. So that would be drilling down into the individual stocks, right? And you could do it that way, or if we wanted to, like, let's say, go to a sector. So I think I have the sectors queued up here. I was looking at them earlier. So let's say in the real estate sector, XLRE, this is a sector within the S&P 500. And if we look at the holdings within XLRE, so I went to this page, here are the holdings, and then we could do the same thing on a 1-year basis. We could just sort highest to lowest. So these are the best performers. And then we could sort here by the worst performers. So that would be within the S&P 500 example. Now, let's say you just wanted to break it down by industries. I'm going to go here under stocks. And here we have performance by industry. See here, this tab. So when I click on that, now we have these individual industries. You could see here, department stores, there's 6 stocks in here. Yesterday, all 6 were down, 100% of them. And this is the median return of all of them. So we're looking at median returns of all of them. And here, you could see here there are lots of different industries. Some have more stocks in them, some have less. But if we wanted to, let's say, just look at the last 2 weeks, see the best performers. So in the last 2 weeks, residential construction was the median return of all of them were 13%. Yesterday was down, but in 1.3, but you can see in the last 2 weeks, up 13%. Building materials, beverages, non-alcohol, the median return of those looked, if we sorted it by last 2 weeks, outperformed. So if we wanted to see, well, which stocks are in there, if you click this open, now when I opened it up, now it gives me the list of these 23 stocks. Okay, so these are the residential. So these are the list of these stocks. You can see here, Beazer Homes, Century Community, right? We could go down, look at the list. Toll Brothers is in there. And then we could, if we wanted to see, so you could see here, how they performed the last 2 weeks, but we could also sort it in here and see which ones were the best in the last 2 weeks. So that would be drilling down by industry. And then within the industry, you could go and see which stocks are performing the best within that industry. And, so the 2 week period would be the more shorter period. But you could go back, you could see up to 1 year. So if we went here, let's sort by 1 year. So in last year, even here, residential construction. Yeah. So if we go over here on a 1 year basis, let's take a look. Here's one, Beazer Homes up 154%. MI Homes. So you could see some of these stocks have had really good runs in the last year, which is a little bit surprising, right? Looking at it, Will, with interest rates moving higher, mortgage rates moving higher, but in the last year, they look like that those stocks themselves had a good year.
Yeah, they did. I mean, some of them are coming off significant sell-offs, right? So
from the prior, maybe, but
but they certainly rallied into some uncertain times. That's for sure.
Yeah, this is over a 1 year period that looks like they've had significant gains here. As a group, it looks like this is the median return, right in the middle. But even here in the 1 year, I'm looking at all these; they're all up on the year. Anyway, look, it's if I was blindfolded and had to pick a sector, I wouldn't, that that did the best, I wouldn't pick that one, the residential construction. So that does.
Yeah, it's a little shocking.
It's a little bit shocking. Yeah, not what you would have, almost the opposite of what
Actually,
I would have
it's funny
expected.
you asked it because we did get a question from Rob. Uh, Rob's always doing some interesting research, and I'm going to share an article. He did send an article about a bank, the largest bank in China, was hacked, I guess, overnight.
Yeah.
And it's affected their whole processing of
Oh, really? Yeah.
transaction. I mean, it's pretty scary when you read it. I'll share that with the community. But he
Yeah.
also talked about this, and you've probably heard about it. They sued all the large real estate firms
Yeah.
for like monopolistic tendencies on their prices of how much they charge buyer commissions. Basically, I don't know if you've read
Yeah.
anything about this,
Yeah.
but
Yeah.
he said that he had read that Keller Williams could maybe go bankrupt because of it. And his question about the chameleon was, is there a way to screen for stocks that are in the that could are in the real estate industry, basically?
Um, yeah, let me. So what would that? So, well, give me a symbol that would be affected. I think they said
Well,
like Zillow.
like Remax. I went to the stock screener,
Yeah,
and under industry, there's real estate services.
yeah. So
I mean,
I think
you
one of the,
obviously this is just going to give you a large list, and you got to go through it. Like Douglas Elliman is in that list, Remax.
yeah,
Uh, but you look at them, and they're all. I mean, and it's a large list, right? WeWork's in it, and a lot of those stocks look like they're near 52-week lows. So
right. I'm not sure if the REITs would be. It would be. Well, what is this? I'm trying to see like if there's like a ETF or something that I could, that is tracks that sector specific industry.
well, like
Uh
Redfin's one, RDFN.
or DFN. Okay. So RDFN here, let's go with similar stocks. So RDFN, these are, let's see here, let's look at real estate agents. So here's Redfin. I mean, I don't know all these stocks. They're not familiar to me. I don't know how many of these are actually going to be affected by that mod. I think though the stocks that are going to be affected are the ones that are directly um drive their revenue from that commission
Yeah,
based.
100%.
And I think what is the lawsuit is that you can't split this, you can't, the seller is not responsible to split the commission of the buy, something like that, where it's basically going to drive down the rates, right? The
Yeah,
six
it's
is
gonna
going to be.
drive realtors are gonna be negatively impacted for sure, is what it sounds like. But there is also a billion-dollar settlement too. So a
Yeah,
lot of these, and listen, it's happening not at a great time, I would think, for this sector in the real estate industry, right? There are
yeah,
not a lot of transactions. Realtors and real estate agencies make their money off transactions, and that
it,
it's slow right now, right?
it is
Everything you
slow,
read about
yeah,
it, it's slow.
yeah. Here and then look at Redfin, still up 61%. Looks like in the here's Remax, that was down a lot, but yeah, I think that the commission structure, um, if it changes, I don't know how it's going to impact because that industry also works on, it's all commission based. So the the buyers and the sellers don't really pay any fees until there's a transaction, right? So I don't know if there are any real estate agents out there like listening, but I think that buyers agents, they basically go around showing customers um different properties for sale, try to find them their ideal property, do other things for them with contracts and stuff. So all that, it's based on a that they get a commission off the transaction, right? So the buyer doesn't actually, doesn't pay up front for any services. It's just embedded into the the sales price, the commission sales.
Not anymore.
So if that's not,
Rob said it was a judgment, not a settlement. So going forward, the lawsuit ruled the seller is not required to pay the buyer's broker's commission.
Yeah. So basically then I guess then if you take that position, then the buyer's agent, if you're looking to buy a house and, you're calling a realtor and, how, the buyer's agent, like, how does he get paid for that service? Like, how do you, then you have to charge then the buyer fee,
no, there has to be a contract, right? When you go to closing,
that the buyer, that the buyer will then pay you at the end of the, transaction. I'm not sure how they're going to have to change the whole structure of how you do it, because right now, the buyers kind of can just walk away with no contract, no obligation. If they don't, you could search 6 months for a property and then just change your mind and
this happens to realtors all the time, right? I've known realtors, and it's not a fun spot to be in, right? You've walked a person,
right,
to 100 different buildings, and then they find something on their own and they're gone.
Exactly, that they're gone. So from that perspective, it's not going to only impact the agents, in my opinion. It's not only going to impact like the agents, but now the buyers that are trying to search for homes, right? They're going to be faced with a different situation than they've been, right? They might have to now either pay a fee or sign contracts that they're not going to be able to, just walk away from.
Rob is saying that their agents are either going to have to pay per showing or per purchase price. They're going to have to sign some sort of contract.
Yeah, it turns the whole structure upside down. All right, it turns the whole structure upside down, where all of a sudden, how do you service the buyers and the sellers, and who's responsible for what? So it's definitely turn that industry upside down, where they have to figure out a different
the model's going to have to change.
The whole
and
model.
These companies are going to have to come up with some settlement money. So
well, they could go out of business.
Almost $2 billion. Well, that's why Rob was looking at it, right? He was looking to see if there was an opportunity to. But it looked to me like, when I looked at the ones that I know directly deal with, people looking to buy a home, Remax, they're all seem like their stocks are already. I mean, like Redfin has rallied this year, but it was about to look like it was going bankrupt for a while.
Yeah. And I think that these real estate agents, not only do they have liability there, but I also believe that they may have liability with the way they structure their businesses, where they're signing up agents as if they're like independent contractors.
Yeah, right? You're right.
But in reality, they're not independent contractors, because they have all these obligations that just like an employee to that firm, right? You can't just work for 5 different real estate agents, and all the contracts, everything, it's all stipulated by that agency. So in effect, what they're doing is they created a system where they have employees, but they're circumventing the rules, for tax purposes or liability, whatever it is, and they may have that liability issue, and that might come up eventually too. Like this isn't the only issue that they have, because this industry itself,
Yeah, well,
for a
this
long time,
may cause realtors to sue, right?
the
The
real, the
agencies
real, I
themselves.
think the real estate agents have a very good case suing these agencies. They may have a stronger case than the buyer,
Yeah.
because
As I'm looking at the available now, these are the public traded entities, right? This
Mhm.
Douglas Elliman, market cap of 150 million, Remax Holdings 176 million. There's not a lot of money to go after here in these stocks. I guess
No,
the
it,
biggest player in the space
yeah,
isn't on this list, I don't think, but it's Berkshire Hathaway, right?
yeah,
They have a
Berkshire,
big chunk of the real estate industry at this level with what's the
yeah,
firm?
and
What's Berkshire
if
Hathaway,
you,
right?
yeah, and people have looked at. I mean, I know, like, accountants and lawyers have told me, like, that I know, like, that they might have a serious liability, because they're basically, you could say, structured it in a way where, they hire people and treat them like employees, but to circumvent taxes and liabilities and stuff, they created this structure where they're saying, oh, they're really independent. I mean, it's almost like it's a bigger scam than the buyers. You know what I mean? If they're coming after them, I'm sure that this is probably what they're going to be looking at next, and saying, well, you know, you
That
know,
could change the whole
the, the
industry
whole
again. Actually, Chuck mentioned realtors long ago decided to make their data available online for free to the public. That was a big change, and
yeah. Yeah, so yeah, the whole structure may change, the whole fee structure, the whole payment structure, that
listen, at the end of the
that
day,
thing.
that could be good for. I mean, you look at Redfin; they are more in the sales game of real estate, but it's
Yeah,
also a website, right? They compete with Zillow. Zillow's another one. They make
yeah, yeah. Well, Zillow, I think, is getting caught up, because what Zillow does. Let's take a look at Zillow. I think what Zillow does is they generate their revenue by selling leads to uh buyers agents, right? That's who they sell leads to. They sell leads to for so when somebody goes on Zillow and they find a place that they might like, then and they inquire about it, well, Zillow sends that information to a real estate agent that is purchasing it, and then they call that person, and they're relying right now that buyers agents are going to pay for these leads for it's like an ad, and they might be caught up in this whole thing, not from a liability, but if the structure changes, they have to change their fee structure, or how what is the model to generate revenue. Yeah, so that whole thing might be, if they're looking at it and and trying to change that industry, there are a lot of things within that industry where they could come after.
Yeah, not a lot of certainly in the publicly traded market.
Huh?
Market cap left to take from them. I mean, I look at the market. If they're going after those two companies, if they're
Yeah,
part of the lawsuit,
yeah.
uh, they're just going to declare bankruptcy, right? They don't have the equity to do
Yeah,
it.
they might. Yeah,
But
yeah,
you look at I don't know, can you go after? I mean, Redfin's a tech company as well, but still they've been, even though it's rallied lately, it's still way off its high. Uh, the big one,
yeah.
which has got to be Berkshire Hathaway, right?
They're, yeah, they're in the same. Yeah, it's one of their businesses. Yeah, they're in that business as well. So, uh, they're looking at it, and when you that industry, the setup itself, the entire setup is under suspicion. It's suspicious the way it's set up. So we'll see. But we're right up at 9:30. Will, I don't know how it led into that, but it was an interesting conversation.
Yeah, it was great.
Yeah.
And Mike just showed up. Good to see you, Mike. All right. Well, great job, Dima. Great questions. It's the questions that bring it. So great question from Wes, from Rob. Actually, I got to share. I'll share the article Rob sent over about the bank in China. That's also worth a read. I mean, it's pretty scary thinking about a bank being hacked and like you can't process anything. It's scary. Great job, Dima. As always, it's Friday. We will see you next Monday, everybody. Thank you.
Yep. Thanks, everyone. Stay safe out there. Have a great weekend. Have a great trading day. And yeah, hope to see you guys Monday.
Trade in peace, everyone. We'll see you Monday. Have a great